Welcome to the Thursday edition of the Tech Stocks Daily Podcast. Today we'll unravel the latest drama in the tech world, starting with Apple, as Tim Cook maneuvers geopolitical chess amidst U.S. China tensions and a brewing spat with Meta. Then we pivot to Google's solar power play with Energy Ray, shedding light on their net zero carbon path, and scandalous AI ad timing for YouTube creators. Finally, shifting gears, we dive into United Community Bank's flashing impressive dividends left and right, pleasing shareholders like an unexpected money shower. Strap in for a tech adventure that blurs the lines between Wall Street thrills, global strategies, and cutting-edge innovation, all packed into one electrifying episode. Let's dive into why Apple is making headlines today. And trust me, it's a juicy narrative, stock full of intriguing twists and turns as it flexes its tech muscles and geopolitical savvy. First up, Apple is under the microscope in a comprehensive industry analysis as it stacks up against competitors in the technology hardware, storage, and peripherals sector. There's meaty financial stuff here if that's your cup of data. Apple's price-to-earnings ratio sits comfortably at 33.07, presenting itself as a potential value compared to industry norms. But hold your applause. Its price-to-book ratio of 47.48 suggests it might be a smidge overvalued. And don't even get started on the price-to-sales ratio of 8.06, driving home an overvaluation narrative like a tech stock runaway train. Let's pivot. Apple's return on equity is looking chiseled at a rock-solid 37.11%, over-delivering like a kid in a candy store compared to average numbers. Despite high profit margins, the shadow of slower revenue growth does cast a slight gloom on the sunny Cupertino landscape, suggesting that while Apple might be raking it in, it's not expanding its vault as fast as Indiana Jones would snag ancient artifacts. Zooming out a bit for a broader geopolitical perspective, Apple CEO Tim Cook is playing chess while others play checkers. He's navigating international waters amidst President Donald Trump's odd theatrics regarding manufacturing hubs. Trump reportedly had some stern words for our buddy Tim about expanding too far in India, allegedly desiring less investment outside Uncle Sam's territory. But here's where it gets fascinating. Apple is ramping up production in India because tensions with China have hit a fever pitch, and flirting with Indian manufacturing chalks up to a double win. It's not just technological tete-a-tetes, though. Tim Cook has also been rubbing shoulders with top government officials to win favorable trading grounds. Apple scored temporary tariff exemptions amidst looming China-centric tariffs. Talk about negotiating like a tech world, Liam Neeson. A fresh U.S. China trade truce has left Apple sitting pretty. The news soothed worries about hefty import tariffs that had investors biting their nails. Any semblance of tariff relief is like a multiverse crossover episode for Apple's stock performance, which notably got a boost after the announcement. Add to this mix Apple's tussles with Facebook parent Meta Platforms. Mark Zuckerberg tossing casual shade at Apple's lack of inventive mojo since the iPhone, while Meta shuts down access to flashy new Apple AI features on Facebook properties, adds a lively twist to an already riveting blockbuster. Put it all together, and Apple is standing at a fascinating intersection of technological prowess, strategic expansions, inventive AI paths, and frothy market dynamics. It's an empire in balance, as Wall Street, customers, and rivals keenly watch Apple shape the 21st century marketplace, one iPhone, one tariff, and one Facebook feud at a time. Today, Google's got a double feature in tech news, so grab your popcorn. First up, Google is working to shine like the solar star it aspires to be by signing a massive renewable energy deal. They've teamed up with Energy Ray, an ambitious developer specializing in large-scale renewable energy projects. This collaboration involves a hefty 600 megawatts worth of new solar and solar storage in South Carolina. Combine this with their previous projects, and Google and Energy Ray are marching toward a grand total of over 1 gigawatts of clean, green energy feeding into the grid. The agreement fortifies Google's pledge to erase its carbon footprint like a glitch on your favorite video, aiming to hit net zero carbon emissions by 2030. The venture not only powers Google's energy-hungry data centers, but also fuels economic growth in the area by serving the region's increasing energy demands through locally sourced renewable power. Now, switching gears from solar panels to viewer panels, the spotlight is on YouTube and Google's new AI-powered tool, Peak Points. Brace yourselves, because it's designed to make ads pop up at the best and worst times, right when you're most into that video of cats playing the piano. Leveraging the magical power of Google's Gemini AI, this tool detects your moments of maximum attention, or peak points, ensuring advertisers hit you with that perfectly timed sales pitch. The potential boost in ad effectiveness means creators might see an influx of revenue. Cha-ching. Currently in a pilot phase, Peak Points is sniffing out optimal ad timing by analyzing video elements, both frames and transcripts, to decide just when those ads should roll in. Kind of like rain on your parade, but with more precision. Google's not just playing around with ads, it's a strategic maneuver in the company's broader AI ambitions and monetization push. With recent first-quarter revenues of an eye-popping $90.23 billion, up 12% in just a year, and specifically $8.9 billion coming from YouTube ads, there's no doubt Google's stacking those dollar bills like their Remix 3D stickers. This clever AI innovation comes as new competitors pop up like Perplexity, an AI startup now soaring at a $14 billion valuation, hinting at a lively duel for search market dominance. So if you found yourself mysteriously captivated and entertained by today's Google escapades, courtesy of Gemini AI or powered by solar rays, remember, it's just one day in the life of a tech titan, lighting up and shaking up our digital world. While Google spreads its wings from data centers to ethical ads, they're ensuring every watt and wasted moment is accounted for. Hey tech lovers and finance aficionados, let's dive into the headlines with United Community Banks, Inc., or UCB, and why they're creating a ripple in the news today. So here's the scoop. United Community Banks, a heavyweight in the U.S. financial sector, just announced their latest round of cold hard cash. That's right, they've approved quarterly cash dividends for both their common and preferred stockholders. We're talking about paying out 24 cents per share on the common stock and a rather specific $429.6875 per share for their preferred stock. That's a pretty penny, so if you're holding on to some UCB shares, it looks like payday is headed your way in June and July. Mark your calendars, folks. This move is a real chest thump from UCB, signaling not just their ongoing commitment to shareholders, but also their financial robustness. With assets to the tune of $27.9 billion and 200 branches spread across 6 states in the Southeast as of March 2025, they're not just running a mom-and-pop operation here. And for those of you raising your eyebrows thinking, this sounds too good to be true, know this. UCB didn't become a household name by coincidence. They've snagged J.D. Power's award for highest customer satisfaction among consumer banks in the Southeast 11 times. Also, Forbes isn't shy about showering them with praise either, ranking them among the world's and America's best banks. What's particularly spicy about today's announcement is that it underlines UCB's stature not just as a top 100 financial institution, but as a community-centric powerhouse that values both individual and commercial relationships. Whether it's your grandma opening a savings account or a budding startup in need of SBA lending, UCB is rolling up their sleeves and scooping up some impressive accolades, including 5 2025 Greenwich Best Brand Awards. That's like getting the extra-large trophy at a finance industry bake sale for middle-market satisfaction. Now, listeners, it's your turn to spill the beans. What do you think about these dividends raining down like crisp dollar bills in a money machine? Is UCB knocking it out of the park? What? Or do you think there's another player on the field outperforming them? Maybe you're wondering how dividend strategies are part of tech and finance innovation. I'd love to know what's floating around in your head. Drop your thoughts in the comments below. Rev up those keyboards, and let's keep the conversation going. All right, folks, buckle up because we're diving back into that techie rabbit hole called Apple to debate whether you should consider it a hot buy, a hold the line, or a cold sell based on today's sizzling news. Let's dissect this a little. Apple is in a slightly precarious yet captivating position. With a price-to-earnings ratio of 33.07, it's kind of like the friend who brings just the right amount of intrigue to a party, potentially undervalued relative to peers. However, when you take a gander at the price-to-book ratio of 47.48 and price-to-sales ratio of 8.06, things look a tad rosy and even overpriced, kind of like a gala apple that's been sitting on the shelf too long. Now, as someone maneuvering in this landscape, the return on equity applause is indeed deserved with a hefty 37.11%. It screams efficient capital use, but linger over the finer print, like slowing revenue growth and geopolitical tightropes Tim Cook's walking. Amid U.S. China tariffs waving around and plans sketched out for India, it's a soap opera worthy of binge-watching, tension and all. Let's not forget Apple's tête-à-tête with Meta Platforms. It could frost this creamy cupcake an inch thick since the social media mogul hurls some shade about innovation or lack thereof. Add to that, these contentious trade and manufacturing chess games prompt holding your horses a bit before galloping off to purchase Apple riches. So, what's the verdict? If you already own Apple shares, consider holding them. Apple's solid innovation track record, yes, Zuckerberg, combined with strategic international plays, suggests long-term resilience, making it sensible not to rock the boat just yet. If you're contemplating jumping onto the Apple bandwagon, let these valuations be your guiding star. Conduct thorough research, decipher the nuances, and maybe wait until the market gives you a friendlier nod. Like browsing for that perfect iPhone upgrade, timing can be key. I emphasize, this comes from today's headlines, and they're just one frame of Apple's longer movie reel. So do your own research, check with all the analysts, and always ensure investment decisions match your personal tolerances and financial strategies. Keep rocking that tech-inspired investment world. All right, let's wrap this up with a cherry on top. Today was quite the blockbuster episode in the world of tech and finance. Apple's been playing a high-stakes game of geopolitical chess. Google's harnessing solar energy like a rising sci-fi star while disrupting our video-watching bliss with AI-enhanced ads. And United Community Banks flashed some serious dividends mojo and poised financial stability. What a packed day. If you enjoyed diving into these buzzing headlines with us, don't forget to hit that like button, subscribe for more captivating tales, and share the video with your fellow tech enthusiasts. Join us again tomorrow when another day in tech news promises to unfold yet more adventures. Until then, keep those notifications on and those tech dreams alive.